Alright, let's roll through how we would start our day to see if there's even more edge in our favor to trade. So let's open up BitMEX, jump on the hike and see candles. Looking at the 6 hour, we're going to start there and look at the trend. Maybe a little, see where we're coming from, maybe where we're going. Alright, so after, each candle 6 hours, after lots of uptrend, finally got that nice pullback versus just, steady like up with a little bit of sell-off up, up thrusting. Let's try to kind of topping out here. And we don't really want to trade things that are, one or two candles or not looking like strong. That's a strong move. That's pretty much like that day. By the second day, just about anywhere you went short, you were pretty much going to be rewarded. Anywhere you go short here, you're probably going to get fucked in the ass. Probably not what you want to do. Any place you went long here, even though, they were green, they were small, they were dojis, they weren't like a strong trend. They were just a trend ending. And that trend could have expanded and turned into a big trend, but it did not. So if you tried to trade that day on a narrow range body, let's look at that candle. That candle, the low was 46.06 and the high was 46.812. Well, $800 is more than enough range to make really good money with high leverage. It's also not really moving anywhere. It's kind of just stuck in a range. It's pretty boring. There's not an easy move. It's just up and down, up and down. So the anatomy inside that candle, when you start dropping time frames, is going to look drastically different, which is why we start at the 6 hour, see if there's any like clear trend. If there's a clear trend, like you don't really want to be fighting the trend unless you're really good at this, because obviously this candle didn't start here and go straight down there. If you were to drop to lower time frames, it went all over the place, up and down, up and down, up and down. So if you were waiting for a short and it was down at the bottom, obviously it's going to grind back up in the day. You could ride that back up, but you never kind of really know where it's going to let go, especially when the trend is more down. What's most likely going to happen is that you're going to get bounces, and as a strong trend is developing, everybody's selling off. You can kind of see that volume at certain points. Like this candle was only maybe this big, and it was strongly selling off, and then short started covering if you're trading someplace that has leverage, just not spot, and they pushed it back up. Or you came to a spot where sellers were exhausted, and then the limited amount of buyers, whether the buyers were truly swing longs or just shorts covering, caused a minor rally and a kind of ledge to pop back up. That's that spot where if you're short with the trend, you want to wait for that minor re-rally, because as it lets back go, it's going to continue with the trend. That's why you're looking for those. Now, as you got into these days, you notice the trend starting to end, starting to find less range. It's not really making higher highs, but it's stopping out, it's compressing. Trying to trade this 6 hour versus that 6 hour, there's way less opportunities. The inside anatomy of the candle, it's terrible. And that got really terrible looking at that doji. Like that was 45.871 to 46.524. It pretty much, closed where it opened. There was very little going on. Like that was really hard to trade. That was really hard for a few days. Those kind of days you can make money, if you're really good, but the easy pickings are, the clear trends. So we're looking right now. Is there a very easy clear trend? No. There's the potential end of a trend changing and trying to start back up. Maybe it's finally bottomed out. We don't know. We don't really care. We're not trying to judge that. We're just saying, is there a clear trend? No, there's not a clear trend. There's clearly a trend ending. And does that mean that the trend is going to end and go sideways forever? We don't know. We don't care. We're not judging that. We're not trying to pick. We're just saying, is there an easy trend in place to trade? And in the back of our minds, we're thinking, does that trend potentially start back up? Because tomorrow or in the next, session, we want to come in and say, hey, has that changed? Has there been a trend that's, topped out and started? And we want to change our trading strategy. So for now, let's just look. Right now, everything's kind of bottomed out. You're going a little bit green. And are you going to get that ledge we talked about and then more downside expansion? Possibly, who knows? But for right now, our trend is green, right? So you kind of want to look for long. So on pullbacks that hold, you would want to probably go long. What's our range today? What's our potential? 45.339 to 45.779. That's way tight. Like no one's interested in that. So let's see the anatomy of how that 6 hours being made. The next candle coming out is at 11, and it is 8:13. So the next candle could be green, whatever, who knows? But let's see what it might be. Let's drop down to the 3 hour. Okay, so you can see that green hour the green 6 hour was starting to expand and kind of gave up. So that rally is starting to end. But let's look at, the 1 hours. So let's see how that candle is being made. And that candle has 2 hours and 46 more minutes to close. So it just came out. Clearly, obviously, price is starting to roll over there. That trend is ending. Let's look at the 1 hours. And as you can see, that's the anatomy of that candle. That last 3 hours, that's the problem. It started to bottom out, started to try to find expansion and change trend, but it didn't. So really what it was so far is a counter wave, potentially shorts covering, longs, starting to go long, but as you can see, the interest died. Even though it started to rally up, like the interest is dying. Each one of those hours is getting tighter and tighter and tighter. So if you're sitting around trying to trade now you're looking at a range in the last hour of 45,530 to 45,680. Even at 100x, it doesn't cover fees. I mean, if you absolutely pinned the bottom as the long and it went up, $150, like, it's like 10 ROE. Like, it's not bad, but you have to perfectly catch that move versus trying to catch, 10 ROE inside of a candle that moves $1,000 it's a no-brainer. It's simple. You'd have to be mentally retarded to not get that. If you just apply the basic rules of, rolling through the time frames and looking to trade when things are trending versus, sideways or starting to change trend. So right now at that 1 hour, not so good. Let's look at how these candles are starting to go again, like at the 30-minute. Okay, so that trend is definitely ending, starting to pull back. Let's look at the 15. Okay, so now we've got a potential that you've seen a rally tried to start. You saw it started to compress and you've seen that it topped out, and now it's starting to go the other way. If the daily candles and the 6 hour candles on that were all red, clear, just big trends, this would be that counter wave move you're looking for, because as it counter waved against a trend of down and it rallied back up, you could see where that rally is starting to end and where it's starting to potentially start back up. If you get in at those portions where one trend, maybe counter wave, is ending and starting to go back the main direction of the main trend, that's where you start to get huge expansions of candles in $400, $500, $600 runs, and you can easily clip out 20 to 100 ROE very, very quickly, very easily once the compression stops and the trend starts the other way. So let's drop down to the 5-minute. Okay, how'd that start to play out? Let's blow these up a little bit. As you can see, that rally is pretty shaky looking. Could have went that way there, but overall the volume was expanding, so you kind of stayed with it. Once you got there and it kind of got, potentially short, that could have been one short candle and continued, but you still want to pay attention because those wickings are starting to pull back and letting you know that there's potentially a problem in that trend, that there's some pushback. And there's where the pushback came in. And that right there, again, could have totally just been like momentary lapse before it pushed down more, but here you got a lot of volume coming in, pushing the other way. You just want to get out of the way, dude. Like, let it do what it wants to do. Let it top back out and get back on trend. That's why we don't trade trendless days as well, or small dojis, because this is what it looks like. Up, down, up, down, up, down. And nothing ever really gets on a trend and goes like a full 5, 6, 20 candles deep, on a higher time frame, because, you're getting 5 reds down, 5 reds up, 5 reds down. They're all about equal size, like there's really no trend here. It's just up and down in a range of 45, 340 and 45, 7. That's tough to trade, dude. So right now we're still looking. We're like, okay, let's recap. We're looking for longs after pullbacks to possibly go long. That candle's not amazing. You're coming off a trend ending into a trend that's not sure. That long-legged doji means potential trend change, and coming off of the pretty strong downside, like that might be potential trend change. How far these go though until the trend is done, could be 1 candle, 2 candles, that candle only. This candle could find massive downside volume and just flip, and that's why we started drilling down. So potentially after this range stalled and could trend change or continue, we want to look at how are people responding to that stall and that ledge. And that's why we started going down to like the 3 hour, and we're like, okay, that rally's looking all right, but it's getting weak on this candle. It's saying potentially like, pay attention to me. We could be getting ready to, not have any more of that little counter rally. And then at the 1 hour, like, yeah, that counter rally is deciding, it's not sure if it wants to continue or it wants to break back down in the proper direction. And in the 30, we're going, yeah, it's definitely undecided. And now we're going to start looking for where it stops being indecisive and starts to expand. It's starting to choose a direction. A little bit stronger, starting to give up. The volume's pretty decent. But that's not an easy trade. We want easy trades. We want just idiotically easy trades. We don't want to dick around with like up and down so much. We want to find that expansion. And as we look at that, oh, rally potentially ended. Volume was looking good, and it met a wall. Not easy trading. Do we really want to trade this today? Probably not. You know, it's not so good, and it's not so bad. But like that leg isn't clear straight down all reds. It's, you know, 4 reds down, 3 greens up, 2 reds down, 3 greens up, 4 reds down, 2 greens up. It's so slow trending. Any one of those spots could catch and change trend, and like you don't want to dick around with that, like watching your ROE bounce around and have to take 1 leg, 2 legs, 3 legs, 4 legs, 5 legs, 6 legs, 7 legs, 8 legs, 9 legs, 10 legs, 11 legs, 12 legs to get what you should get in 1 leg. That from there to there, 1 leg. There to there, 1 leg. 1 leg, 1 leg, choppy leg, 1 leg. You don't want that. Like, how are you going to short that and then get that and be in a shitty position to be like, oh crap, is it going to continue? Oh, it's not. Oh crap, I'm back at break even. Oh yeah, I'm back in gains. Oh crap, I'm way underwater because I'm short. No fun. That's not what you're looking for. This kind of stuff, you want to sit around and watch and wait for that to decide and work itself out until sideline sellers and buyers have finally come to enough of an agreement to where there's not discourse between them. There's agreement. And at a certain point, you're going to find that just all of a sudden, you're going to get something like this, where there's been just so much downside. You know, you get your wickings, you get your volumes, and there's just no more sellers, right? No more people are willing to just sell off. And the people below buying start becoming stronger. And that's usually because shorts start to cover. So if you look back, there's probably a short, you know, opportunity. Oh crap. Yep. And they're probably starting to cover. So you start getting short covers buying. And then you get, you know, dip buy bulls. Those two coming together start to outpace the sellers because all those sellers had already been selling off. Now there's people buying. Once you start to break over that rally potential, that inertia, more people join the rally. More people decide, hey, there's strength in this. How long that strength lasts, you know, that's something we kind of just have to look at in the volume and stuff, you know, and like ramping. And you have to watch out for like, you know, supply coming in. You want to look at when it's totally exhausted. And there's a lot of stuff on Wyckoff about this, like it goes in depth. And that's something you really should study. You should be studying order flow and Wyckoff because it kind of gives you an idea as to when exhaustion happens. So when the sellers were exhausted, all the people that were getting out of the way finally decided, oh, it's slowed down. Like, I think I'm okay to buy. And as they started buying, other people started seeing that exhaustion end, and they're starting to see interest on the tape going by. More and more buys, less and less sells, and price is creeping up. And price creeps up, and all of a sudden price expands because all these people are like, yo, it's gonna move. And because everybody kind of has that same conclusion at the same time, you get fat bursts. And then the market maker joins into, you know, it helps a rally. You know, they'll buy through some breakover points just to push things up because they're waiting above to sell back to you because they're trading both sides. You know, they're market makers. That's their job, quoting both sides of the book. And, you know, they want to quote inside of a range where they can buy low and sell high and vice versa. And they're going to help rallies that help themselves. And they're also going to, you know, try to hit liquidity pools. Like if there's a huge liquidity pool down below and they know it's only going to cost them a couple, you know, $1 million to break it back the other way, they're going to make sure they throw that on there and stop rallies. That's something else you have to like really learn. That's super advanced and not really conducive to what we do here. But if you want to know that kind of stuff, there's lots of information out there. It helps you kind of see these spots where targets are set, targets are going to be joined in by the sideline people because it induces them to finally buy or sell, or to get the fuck out of the way because they don't want to get clipped by like, you know, this weird lull, like where everything stops. Like there's this, it's like free fall, you know, like when you ride a ride at like an amusement park and all of a sudden it goes and right there, that's free fall, dude. Like everything stopped, like all the volume stopped. Like if you were watching the tape and you were trading, you were like, yeah, the tape's speeding up, you know, the buys are going up, the price is going up. I mean, this went from 45, 185 to 45.7. That's a pretty good expansion. If you're on that ride, you're feeling the inertia build, and all of a sudden you see that huge pop, and you're like, yes. And most of that volume got rammed into one price point that stopped it dead. And then it just stopped. There was probably no more tape. Nothing happened, just like that little doji, and the volume fell off, and everyone went, uh-oh. And nobody knew what was going to happen. You want to get out then, like there's rallies potentially stalling before continuation or before reversal. But, if you've got gains, and we're trading high leverage, get out. And you want to look for like really good spots like that where everyone comes together at once and makes a clear decision. We're taking it this way and we're all going to buy. And everyone that's selling starts disappearing off the books, and it just vacuums up or vacuums down depending upon which way everyone consensus is on. In the meantime, when there's no consensus, everyone's kind of like arguing. That's why price chops around. They're like, I think it's worth less. I think it's worth more. I think it's worth less. I think it's worth more. Until you get a big pool of people on the same page to outweigh the other side, for supply and demand, it's just going to chop around because supply and demand is being met in a very tight price range, because that's it. There's like 10,000 people that want to sell 10,000 shares, 50,000, and there's 10,000 people want to buy at 49.9, and everyone's needs are met, and it stays in a very tight price range, and there's nothing to trade there. At a certain point, though, everyone that wanted to buy, at the 49.9 buys, and everyone that wanted to sell at 50 sells. And then that's it. The people that wanted to sell are out, and the people that wanted to buy, now they own something, and they go, that's it. There's no more demand or desire. Eventually, something tips the point, news or whatever, and they go, oh man, Bitcoin possibly going to 30. Now those people that just bought, now they're sellers. If they don't have the conviction to hold through, now they want to sell. So the ask gets heavy. People see that, and people go, ooh, I don't want to pay that much. We might be going down. And then all of a sudden there's a rally to the downside, and that's where the rallies start. If you kind of know the anatomy of a candle and know the anatomy of what makes the market and the structure as far as supply and demand, and who is on those cells and why, you kind of get an idea if it's going to have continuation or not. Because if everything is bad in the news and you don't see anyone selling, then you can kind of conclude in your own brain, like, well, everyone sees what I'm seeing and nobody's selling, so there's plenty of conviction. And if you don't see like the market maker step in and just start unloading shares, then it's stronger than it should be based on really bad news. However, if you see all this great news, like everyone should buy, it's so good, and all you see is lots of tape going by and lots of buying, but the price isn't moving, that means somebody's unloading on you. They probably own the news networks or have very good connections to run really good news to get everyone in the mindset, hey, I'm going to take my liquidity and I'm going to buy because I'm going to get an easy score here. It's going to go up. And then this is what you see. You see something like this. Someone's just unloading. Lots of people are buying, but someone's unloading like crazy. They most likely, got you induced to buy something that's topping out. And that's more advanced stuff. Again, there's so much stuff on Wyckoff, like Jesse Livermore's tape reading out there. Those kind of things are like core and basic to study. If you don't read those things, you really probably shouldn't be trading or trading high leverage or trading trends. Not on lower time frames, because the money made here is made on 40x to 100x, because these moves, they're not huge in the grand scheme of like, that's the 1 minute. All it does is drop down, pump up, drop down, pump up. And you want to get on a rally on the 1 minute that goes 15-20 candles over several $100s inside of a bigger range, because that's easy. But if you look at that in the anatomy of a candle, and all those 1 minute bars become 5 minute bars, that's a little more clean for someone who's trying to like trade over like a week. But even then, you're trying to pin down an entry. Where's your entry on the 5 minute? They keep scaling up and they miss all this. So now those 5 minute candles, now you turn them into an hour, and that looks a lot less up and down, because that bar, that wide range body bar, doesn't have all that up and down like we just looked at. It's just one giant bar to them. But the reality is that one giant bar looks like all this inside of there. And you miss all the nuance, all the granular, everything that tells you the feel of what's actually going on, of where the trend might change. So when you're looking at this up on the 1 hour, you're going, oh, it's probably bottomed out, and it's, trying to, and it's most likely going to go back up to 53, and it probably will. But between there and there, it could go 500 this way, 1,000 that way, 400 this way, 1,000 that way. And that's where our money is made. Our money is made on high leverage, not trading 1x, where if I'm trading 1x, I need it to go $10,000 to get a good return if I'm only trading like $1,000 position. If you're trading $1,000 position on the 1 minute at 100x, then those moves are magnified exponentially. I mean, it's huge. It's huge what you can get into. So you really have to drill down to the granulars and decide how far is something going to move and how long is that rally going to last, and if you don't start from the 6 hour and drill down through the time frames, you really don't have an idea of how far potentially it really should run. And if you don't read order flow and tape, you won't have an idea of when, say, a small little tight body like a doji is actually going to expand past and stop being a doji on the bigger time frame, because you don't see it on the 1 minute. You don't understand that the chart's going by. So with all that said, let's just pop over here. Okay, let's see, like today, okay, so we have like 400 whatever bucks in here. We'll see if we can make that more. But if you're looking at the books, right, this is all the people that want to sell, all the people that want to buy. Look at the anatomy of the candles. We're looking at, what's our move? Like, is there any good expansion? Everything's really tight. Like, we already looked at that. There's a shitty doji that's slightly green. It's not really good. But here's your last trades. This is your tape going by. You kind of want to look at the quantity of size and like how many sells, how many buys. When a rally starts, like to pump up, and it's, done exhausted to the downside, you're going to just see just a stream of green. Boom, 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 boom. And it's just going to keep rallying. You're going to watch it go through these each box, like this box to this box. That's a 10-minute box, right? And that box to that box there is right now $25. So if you see this, just ranging inside of a $25 box every 10 minutes, that's worthless. When that tape starts just going nuts and expanding, it's going to start cutting through these boxes fast. Every 10-minute box, or every 10 minutes this way, instead of it just being like one box or inside two boxes, it'll be like 6 boxes. You want that. You're looking for an expansion of trend that starts. And then when you start seeing a stream of red and it starts topping out and hitting like, wicking, you probably want to get out, because it's going to change trend just long enough to steal your ROE, because you're trading super high leverage. Okay. Where if you're trading 1x, like a $300-$400 move means zero to you, because you need it to move several $1,000s to make like a couple % return. You don't worry about that, because also there's no way to liquidate you, because you're trading spot. And if you're trading super low leverage, your stops are so wide that this thing could fall $25,000 and it doesn't matter. So after that, we want to go through our day, look at all that, decide, is there any trend? Is there anything we can do? Is there anything we can do that's going to be easy money for us? Next, you want to pop in here and look at funding, right? How long till funding? Can you get in and out and trade in 28 minutes before you pay funding on this? Okay, that's every one of these is 10-minute box. So now they're not, because I changed them. So they're 5, right? That's the time to funding. There's no chance to get in and out. You just want to skip on that. Funding is going to come and it's going to rake you over the coals. On Margex, you're going to pay 0.12 for a long and 0.7. That does fluctuate. I've seen it as high as 2 for the longs and 2 for the shorts, whatever, but both sides pay. You're not getting paid here like you do other exchanges. So you got to be good and you got to be precise. I'd wait to 20 minutes because that gives you 8 clear hours. I'd also not try to trade dojis, because this is the range over the last, from 10 to, it's 5 hours. Actually more than that. What's this? 5. It's a lot of time. Like, that's almost an entire session. I did nothing. But just prior to that, made a good move. And like we talked about, 1, 2, 3 boxes, that's a good trade. You want to start looking for really easy trades. Oh, there's a session breaks right there. I have session breaks on my chart. So every 8 hours, that's funding. Boom, boom. That means funding is about to hit. So inside that 8 hours, it gives you all that time to catch 1 leg, 2 legs, 3 legs, 4 legs, 5 legs, 6 legs. But really, that's 1 leg, 1 leg, 1 leg. But you can see all the mini dumps and rallies that you get stuck in while you're waiting for the trade to work out. So definitely pop in, look at your funding. Try to find the up or the downs. And then from there, you want to really start to look at tape when you can handle tape. Tape matters a lot to start to see when a rally is going to start to end or continue or just go sideways. Like if this starts going super slow, there's nothing going on, and it's, a doji day, like leave, go do something else. There's nothing here for you. There's nothing to trade. There's nothing but frustration and sideways. We don't care. Let someone else handle that shit. And you come back when, buyers are exhausted or sellers are exhausted, and then everyone understands that and everyone goes, okay, I can get away with putting in a buy because the bottom is in, sellers are exhausted, and then everyone else goes, oh yeah, let's do this, and then boom, rally. You don't get very many good trended rallies a day, maybe a couple a week. When you do, like they go $1,000, couple $1,000, if you can get on that, you make really, really good ROE returns and really easy hits. That's the name of the game. Easy hits, low risk. Try to trade your longs after it's exhausted and went back down to the bottom and then it's getting ready to repump and re-rally. And try to make your shorts exactly the same. Like if it's a short day and the range is 50,000 down to 47 and it's pumped back up to, the top, that's great. Let it pump back up because now you're going to get with the trend and go down because almost everything is on your side because you're trading inside the trend of the bigger day and you're trading after it re-pumped, it re-rallied, and it's reached the top of its counter wave. And now you look at the tape and you go, yep, showing signs that the counter wave is done. And we're going to get back on the main trend. That's where your least risk is. That's where you make the most money. That's where you can make a little bit of sloppy entry and it'll just take care of you because overall it's going to trend back down because it's on trend and the counter wave is done. That's where you make your money.